Good afternoon. It's December 18th, 2012. I'm Logan Burgess. Joining me to my right here is Cody Bills. Cody, let's jump into fire tip. See how the grains ended up here on a Tuesday afternoon. We see corn down 3.5 on the March contract. Wheat actually picking up a little bit of ground here today, up 4.5 for Chicago wheat. The big story, though, that everyone's talking about today, obviously, is soybeans off 30 3/4 cents, all the way down to 14.65.5 on the January contract. What's kind of your take on the market? What was pushing things today?
Well, of course, we had a fast news announcement that basically China canceled about 300,000 metric tons of export sales for beans. We also saw unknown destinations cancel about 100,000 metric tons, but we did see another announcement that there was about 110,000 metric tons purchased from unknown destinations. So there was a little bit of a mixed feeling to that report, but all in all, we lost about 310,000 metric tons off the export sales that we've recorded up to this date. I think really that kind of started to scare the market a little bit. They're starting to think a little bit about demand. You got South American production kind of overhead, and of course, you have that $15 price level, which acted as a resistance level. We weren't able to really get and close above 15. And of course we started selling, and I think it just started to snowball toward the end of the day. We found support right around 14.70. We touched on it 2 times, and by the end of the day we fell right through it. We saw a very sharp impulse lower, and that's where we closed. So we ended up closing below that 200-day moving average, and I think that's pretty bearish short term.
Right. Fundamentally, is this a game changer? I know you and I talked about it because we've been reporting here for a while. Export sales of beans remain very strong here, considering the pace needed to meet USDA expectations. Is this a game changer, or is this kind of more of a psychological blow to the trade today?
Well, right now I'm kind of noticing a little bit of a deviation between the fundamentals and the technicals right now. Today was a very, I would say, very bearish day technically. It is only one day of trading, but I do think it had a lot of impact, and it leaves me looking at this chart and thinking, well, maybe $15, maybe we won't be getting up over that. So we're obviously going to have to wait and see what happens tomorrow, but I do think that this is a time when producers really need to be thinking about how they're going to protect themselves, because I do see, based on this candle that we observed, we saw this engulf an entire couple weeks of price activity. To me, I think that's very bearish. Close below the 200-day moving average. We could see some selling going forward, but this is a deviation from the fundamentals, and the fundamentals to me are very strong. Export sales are very strong. We've booked about 32 million metric tons already. We're about 5 million tons ahead of pace compared to where we need to be to meet the USDA's expectations. We only have 4 million metric tons to go. We had 2 weeks of extremely solid export sales. To me, I don't think this changes that. To me, this is just a minor step back. It's only 300,000 metric tons. Like I said, we have about 4.5 million metric tons left to go. So 300,000 is kind of a drop in the bucket compared to where we are right now.
Expectations moving forward here over the next couple weeks, coming into the January WASDE report, are going to be really critical to drive this trade. Fundamentally, Cody, internationally right now, things do seem like they remain very strong, even taking into consideration the cancellations we saw today. The one thing, though, that we wanted to share with you guys today was the crush margin that we're observing right now in the soy complex. If you take a look at here, the green line is where the crush margin is per bushel. This year, the blue line here is where we saw it in 2011, and the red line here is the 5-year average. So as you can see, for the month of December right now, exceptionally strong crush margins, over $1.50 a bushel. In the past, we've seen it get over $1.50 a bushel for short periods of time. We're coming on here 5 or 6 months right now of exceptionally strong crush margins. I think as a result, the USDA is looking at this as well, and that's probably one of the reasons why they raised their projection for crush in the December WASDE by about 10 million bushels. Certainly people are going to be keeping an eye on this moving forward, but I think it just kind of adds on to the international bullish sentiment that you were discussing, talking about. Domestically, crush remains strong, and we've seen the cash market remain pretty firm here in recent weeks. So I think that kind of lends support that the fundamentals remain bullish for the bean market, but certainly technically right now there's some things to worry about. Yeah,
we might have overdone it a little bit today on the downside. People definitely unwinding right near the close, and we'll have to see. Maybe we'll get a little bit of a snapback tomorrow, but if we do stay down below this 200-day moving average, it has me a bit concerned. And if I was a producer out there, I would be thinking about how you're going to be protecting yourself, not only for this year's crop, but as well for the 2013 crop. But that pretty much wraps up GrainTV GrainTV for today. Just remember, Grain Hedge is more than just low-cost trades. To get an idea of what we provide to producers, visit grainhedge.com or take a demo of our Fire Tip trading platform. Thanks a lot for tuning in, and we'll see you tomorrow.
Have a good one.